Have you ever wondered how some investors stay calm even when the markets are a mess? While others panic, they make clear and calculated decisions. The key might be in an ancient philosophy, Stoicism, which has helped leaders like emperors, generals, and thinkers navigate turbulent times. Today, I'll show you how Stoic principles can be a powerful guide for your finances. Welcome to Financial Resilience, where your finances meet success. Stoicism is a Greek philosophy that emerged around the 3rd century BC, founded by Zeno of Citium. Its main focus is finding peace and inner stability, not by controlling external circumstances, but through self-mastery, discipline, and accepting events as they are. Stoics, like Seneca, Epictetus, and Marcus Aurelius, taught that it's not the events themselves that make us suffer, but how we react to them. In finance, this perspective is incredibly valuable. Investors face uncertainty every day. However, those who can keep a calm mind and control their emotions have an advantage. Just like in life, finances require a combination of Stoic virtues: self-control, clear reasoning, and acceptance of the inevitable. The best investors not only understand the market, but they also understand their own reactions to it. The financial world is, by nature, uncertain and chaotic. Markets go up and down, sometimes without warning. In times like these, Stoicism offers essential guidance. Instead of giving in to fear or greed, Stoic investors learn to stay composed. And this emotional stability is what allows them to make wiser decisions. A perfect example of this happened during the 2008 financial crisis. The stocks of major banks and corporations plummeted. Less experienced investors, filled with panic, sold their stocks at low prices, making their losses even worse. On the other hand, investors who practiced Stoic principles remained calm. They took advantage of the lows to buy at reduced prices, knowing that markets recover over time. Controlling emotions is one of the pillars of Stoicism. In investments, this means resisting the urge to react impulsively to market swings. Warren Buffett's story during the 2008 crisis is a clear example of staying calm during uncertain times. While many were fleeing the market, Buffett saw opportunity. His ability to stay emotionally in control and his commitment to a long-term investment strategy allowed him to buy stocks of undervalued companies, which resulted in huge profits as the markets recovered. Another relevant example is the dot-com crash in the early 2000s. Although many investors panicked and sold, some of the most patient and stoic saw the crash as an opportunity. Companies like Amazon and Apple, which suffered in that crisis, became tech giants in the following decade. Focus on what you can control. One of the most important principles of Stoicism is to focus on what you can control. In investments, this means focusing on factors like research and asset diversification. We can't accurately predict market movements, but we can build a strong portfolio based on rational principles. It's essential to understand that events like interest rate fluctuations or global crises are beyond our control. However, the true power of an investor lies in how they respond to these events. The key here is to accept what we cannot change and dedicate our energy to what we can. Research, manage risks, diversify, and follow a long-term financial plan. This frees the investor from the anxiety that comes with market uncertainty and allows them to operate from a place of mental clarity. Discipline and patience. Stoicism encourages discipline and patience, which are essential in any solid investment strategy. An investor seeking quick profits is doomed to fall into emotional traps. Patience, on the other hand, rewards those who know how to wait. The story of Amazon is living proof of this. The early investors who believed in its vision and held onto their shares despite the initial volatility saw their investments grow exponentially. Another lesson in patience is investing in index funds. Although some investors are tempted to look for the next big thing, many experts, like John Bogle, founder of Vanguard, have shown that a disciplined, long-term investment in index funds consistently outperforms riskier investments. Preparing for adversity. Stoics like Epictetus teach that we should always be prepared for the worst. This doesn't mean being pessimistic, but recognizing that adversity is inevitable. In the world of investments, this translates into strategic preparation through diversification. By spreading assets across different classes, such as stocks, bonds, real estate, and others, investors can minimize the impact of crises in a single sector. During the COVID-19 pandemic, many investors saw their stock investments plummet. However, those who had a diversified portfolio with bonds and other less volatile assets managed to maintain financial stability, protecting themselves from the worst effects of the crisis. Amor, Fati, and financial success. The concept of Amor Fati in Stoicism means loving and accepting fate as it is, with all its difficulties and challenges. In finance, this means seeing both profits and losses as inevitable parts of the investment process. Instead of regretting losses, Stoic investors look for opportunities in them. A good example is the 2020 recession. Many investors, seeing the market fall, chose to sell. However, the Stoics, with their ability to accept reality, saw the falls as opportunities to readjust their portfolios and buy assets at reduced prices, securing future profits. Advantages of Stoicism in negotiation and decision-making. In the financial world, making decisions based on reason is crucial. Emotions cloud judgment and lead to costly mistakes. During the pandemic, for example, Elon Musk demonstrated how mental clarity and emotional control allowed Tesla to maintain its long-term vision, achieving monumental successes even in uncertain times. Keeping emotions in check not only helps in decision-making, but also in risk management. Stoic investors mentally prepare for ups and downs, allowing them to navigate market cycles with greater peace of mind and stability. This financial resilience is key to long-term success. The importance of a Stoic mindset in building long-term wealth. One of the most powerful ideas in Stoicism is the notion that wealth is not simply a matter of having money or material possessions, but of developing a mindset of abundance and inner stability. In the context of investments, building long-term wealth requires not only sound financial strategies, but also a resilient mindset that can withstand the inevitable challenges along the way. Long-term wealth is more than just numbers in a bank account. It's the ability to stay calm in times of uncertainty, learn from mistakes, and avoid complacency during good times. Stoics understand that financial success is an ongoing process of discipline, preparation, and adaptation. Consider the story of Ray Dalio, founder of Bridgewater Associates, one of the world's largest hedge funds. Dalio has spoken openly about how his Stoic approach to the mistakes he made in his early years of investing helped him build a globally successful firm. Through reflection and continuous analysis, Dalio learned to take his failures not as something negative, but as an opportunity to grow, which allowed him to improve his long-term strategy. This is an excellent example of how the Stoic mindset, focused on preparation and constant learning, is essential to building sustainable wealth. Instead of seeing setbacks as obstacles, Stoic investors see situations as an integral part of their journey towards financial independence. Furthermore, Stoicism teaches that real wealth is also linked to the correct use of time. Time is the most valuable resource we have. Investors who apply this philosophy learn to maximize their time through smart delegation, the use of compound interest, and the creation of passive income streams. These principles not only protect their time, but also allow their money to work for them, building wealth efficiently and in a balanced way. Ultimately, applying Stoic principles to wealth building is a path to long-term financial freedom. Cultivating patience, discipline, and a perspective of continuous growth allows investors to build wealth sustainably without sacrificing their personal well-being in the process. Conclusion. Stoicism is not just a philosophy of life, but also an invaluable tool for investors. Controlling our emotions, focusing on what we can control, and accepting uncertainty allows us to make wiser and more resilient decisions. By applying these principles to our finances, we can improve not only our financial well-being, but also our peace of mind. Remember, we can't control external events, but we can control how we react to them. Serenity and emotional control are the true pillars of financial success. I like reading your comments. Are you willing to accept market adversity and turn it into opportunity? How would you prepare for it? Your feedback means a lot, and I'm excited to hear from you. If you liked this video, don't forget to subscribe to Financial Resilience for more tips on mastering your finances. See you in the next video, where we will continue exploring strategies for financial and personal growth. Financial Resilience, where your finances meet success.